Ladies and gentlemen, good day and welcome to Technoplast Q1 FY26 earnings conference call hosted by Motilal Oswal Financial Services Limited. As a reminder, all participants' lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Ashish Poddar from Motilal Oswal Financial Services Limited. Thank you, and over to you, sir.
Yeah, thank you, Pari. Thank you all the participants to join us today for the Q1 FY26 earnings conference call of Technoplast. We have the senior management of the company available for the discussion on the financial results, business strategy, and the growth outlook of the company. Now I hand over the call to Mr. Bharat Vagheria, Managing Director of the company, for his opening remarks, post which we will open the forum for question and answer session. Over to you, sir.
Yeah, thank you, Ashish, for introducing us. Good afternoon to esteemed investors, respective colleagues, and thank you to team of MOST for the kind introduction. It is both an honor and a pleasure to address you today as we present our financial and operational performance for Q1 FY 2026, along with our outlook for the remainder of the fiscal year. I am pleased to share that our positive momentum has continued into Q1 FY 2026 with the volume growth of 14% year-on-year and corresponding 10% increase in the revenue. The difference reflects on account of the lower the input cost, which is approximately 4 to 5%, which tempered the revenue growth. Nonetheless, the demonstrated strong operational resilience, maintaining healthy volume while optimizing revenue in dynamic market environment. The composite product, especially CNG segment, emerged as a delivering good growth of 20% around, playing a pivotal role in our overall performance. Together with the strong results from the other composite product, we achieved an impressive overall 18% growth in composite volumes. Notably, our profit after tax increased by 20% year-on-year, underscoring our continued focus on the capacity utilization, prudent financial management, particularly in controlling finance cost, and continued process of automation and re-engineering to reduce the cost and make available the product at a competitive price. We are further encouraged by the sustained demand for Type 4 composite cylinder, as evidenced by healthy order book for approximately 175 crore. This positive trend is complemented by growing interest in our value-added offering, including LPG, CNG, composite cylinder. Simultaneously, our industrial packaging division continued to deliver steady performance. We are also pleased to announce a confirmed order pipeline of approximately 425 crores in packaging solutions for the current calendar year, covering both domestic and international markets. This result underscores the strength of our diversified business model and solid foundations and the risk distribution for the business across the 10 countries. And if I count including India, it's 11 countries. We remain focused on the capturing emerging opportunities and accelerating our journey towards the sustainable environment, responsible growth, delivering long-term value for all the stakeholders. With that, now I invite you to join me to delve into the key highlights of our financial performance presented in the result. We have in fact loaded on the BSE NSE our earning presentation also, but once again I am reading that. During the Q1 FY26 on a consolidation basis, compared to previous same year of Q1 FY25, sales stood 1,354 crores as against 1,231 crore last year, and EBITDA is 196 crores against 175 crores. Profit after tax 95 against 79. In terms of the percentage, which is represented by net sale revenue terms, increased by 10%, which includes India 8%, overseas 14%. Volume growth 14%, 12% India and overseas 17%. EBITDA margin increased by 12%, PAT increased by 20%. Q1 FY26, our EBITDA margin rose 14.5% to 30 basis point improvement from 14.2%. Our overseas subsidiaries also delivered a strong result in Q1 despite global uncertainties. This performance was driven by volume growth, outpacing revenue growth, supported by the lower raw material cost and corresponding price adjustment passed on to the customer. Because we have a relationship with the customer and we are directly having B2B business. Share of the business, established product versus value-added product is increasing trend. Recorded a strong growth of 15% value-added products compared to previous year, while our established product line grew 8.3%. Doubly, the contribution of value-added product to the total sale increased to 26% from 25% the previous year. Reflecting a continuous focus on the innovation and the higher margin offering. Now, share of the India and overseas business is 62 and 38%, as against last year was 63 and 37. EBITDA margin India and overseas almost on the same line, which is in India 14.7, overseas 14.1 respectively. PAT margin in India and overseas 6.5% and overseas 7.9% respectively. Cash from there is a positive net cash from the operating activities around 116 crores. As company has focused for reduction of the debt for every quarter, this quarter also debt reduced by 37 crores. Total capex is in the first quarter is 43 crores, which includes towards the regular maintenance capex, expansion, automation, re-engineering 20 crores and 23 crores value-added products, that is called IBC and composite products. I would like to draw your attention to a couple of the interesting development which during the development which have been seen. Especially, I am pleased to announce in the history of the company, first time that bonus share is announced. 35 years have been completed operations of the company. The board have recommended for the approval in the meeting held on 11th August yesterday and announced the bonus of 1:1, face value of ₹1, fully paid up equity shares of the company held by the members of the company as on the date of the record dates. This is subject to approval from the members at the ensuing 35th annual general meeting of the company, which is scheduled on 11th September 2025, and other regulatory required approvals for issue of the bonus. Another sale of the non-core assets focus is still continue. If I recall my discussion 2 years back, company decided and identified non-core assets worth of 125 crores, which is now reduced to 47 crores, and this money realized and used for the capex and reduce the borrowings, etc. And this focus balance also will be targeting to complete in the next 12 months' time. Now, as again I am repeating, the focus on improving the ROCs continue, and ROC can be increased by increasing the productivity, increasing the margin, increasing the capacity utilization, reducing the working capital cycle time. That focus will continue. I recall in my discussion that we had said 3 years back, ROC should be 14, 16, 18 and 20. 4 years company had made a target achievement. I am pleased to tell you last 3 years we have achieved that target what was kept by the company. 14 achieved, 16 achieved and the 25, 18 achieved. Now targeting for ROC of 20% for FY26. This will be again continued focus on the cost reduction through automation, re-engineering, automations, optimizations, working with cycle time, strategy and development of the newer products which have a higher margin. Consolidation of products and manufacturing unit is also continuing for the cost reductions and optimization of utilization, considering the logistic cost from one unit to our customer. Because you know the India road infrastructure is increasing, so based on that our team is analyzing how we can reduce the cost of the logistic, and wherever cost of logistic is cheaper than the running the separate unit. So our team is regularly keeping focus on that, and accordingly, based on their decision, we consolidating our operations of the units. Then again, I'm just repeating, QIP approval, which was taken last year, is still continue, and it is valid till November 2025. Especially, purpose was also mentioned at time, QIP is for reduction of the debt. Then again, for the automation, re-engineering, CapEx plan for the value-added products. Then certain new product, greenfield product, which is taken by the company, like for sustainability point of view, for expansion. As a company in the polymer packaging products, where company need to do some statutory compliances, to have to consume their packaging material buyback arrangement from the products which we are supplying. After considering the exemption granted by the government notification, the product which have been exported from India, the product which is supplied for the pharma packaging, food packaging, that have been excluded. So to have an statutory compliances, because we are a law-abiding company, the company has undertaken project expansion. For that, the new company has already formed, and we have intimated to the exchange regarding Time Ecotech Private Limited that will take project for the sustainability across the India in three regions: western regions, eastern region, and south regions. First plant will be come out in the current financial year only, and that will be in the western region in Gujarat. The place is already identified. Company has entered into agreement for buying of the premises, ready premises, and I am quite hopeful in the next 3 to 4 months that plant will be commissioned completely. So QIP is the involvement of the various purpose, as I mentioned to you. So will be the right time considering the that, and will go for the QIP. Then recently we have done certain development done in the R&D, especially as you know that we are focusing on the development of the newer product which has a higher margin and high technology based product. Especially we are doing in the composite cylinder, LPG applications, CNG applications, hydrogen applications, gas applications also. So company technical team has made an agreement with the company called Drone Star Technology, who is already existing manufacturers for the drone. Presently, all the drone, special drone is manufactured by him by using the energy storage devices, mainly called batteries. But yes, we have seen, so we will do very close working, sign the exclusive MOU with them for the 3 years for development of the hydrogen cylinder. We have already approval for type 3 and type 4. The cylinder will be used for the drone applications. So initially, the drone applications will use hydrogen cylinder and give the performance, and based on that, we will able to supply by use of this technology for supply of the cylinder for the drone applications, because we all know that drone market is going to be various uses of the drones are there. Various sectors are using in surveillance, agriculture, then this fire department, so many other police department, government authorities, all using the drone application is going to be increased. So we thought it's a quality, performance-wise, height-wise, it's a very good cylinders, hydrogen cylinder, which have a better performance. So we are going to develop this along with the drone manufacturer. Now, our focus is continue for the green energy, conversion of electrical unit by using the solar power. I have mentioned in my last call also, I am repeating, we have around the 15 crores units requirement annualized in India, and if at all the states that units are available by solar, then we can sign the contract. But currently some of the states have that policy, like Karnataka, Uttarakhand, Maharashtra, Gujarat, and that is called Uttarakhand, I told you, then Gujarat, Maharashtra, and Tamil Nadu. 5 states have that policy, so we have already signed the contract. So this year, half year, we will get the benefit of the solar power, where the saving working out around 3 rupees per unit. So in terms of the units, I can say around 8 to 10 crores rupees company will able to save by way of using the solar. But overall focus is continue wherever possible to buy the purchase power agreement by the solar. I am once again clarifying you, company is doing the equity investment for a longer period, maybe 15 years or 20 years, that the face value will be returned back to the company. In addition to that, company will get the committed units which have been signed and will get the benefit for 10 years or 15 years as per the agreement value for the units for which the agreement have been signed. So it's a quite substantial benefits can occur in the period ahead. Then, as we are in the energy storage devices, the company, in the last call also, I have told that there were the two companies we were having earlier, like NAD Energy Limited, which was subsidiary of Time Technoplast. The NAD Energy was having a step-down subsidiary of PowerBuild. So in the last 4 to 5 months, the exercise was ongoing for the merger. That merger process has been completed. Now the PowerBuild batteries is directly owned by the Time Technoplast Limited. For the 97% equity is owned by the company. Now in that, company has taken the project for development of the newer batteries, which includes e-rickshaw batteries, low-cost batteries, and that quite results of the batteries is very good and very satisfactory. So company has submitted and expecting that approval from the government authorities in the next 30 to 45 days, because sample already submitted. It is under testing process with the government ECAT, is called the institution authorities in Delhi. So we have submitted for the batteries for the approval. Another batteries for the power sector batteries, as the power expansion in India is ongoing. That battery is also preparation is on. We will already in the process of submitting our sample for use of the batteries for the power system. As per my technical team experts, we are going to get that approval also in the next 3 months' time, the batteries which can be used for the power sectors also. Now, as I mentioned to you, the new sustainability focused subsidiary Time Tech Ecotech Private Limited, which is mainly for use of the quality recycled material, which otherwise not available in India, because company has various polymer products, and this law has come out only for the packaging products, where company need to have a system of collecting back for the approximately 30% of the packaging product after exemption, which is supplied to the customer. So we are already in the process of appointing local agents to get the material back, reprocess, recycle, and use as per the applications. So we are till we start our own facility, we have made arrangement with the local vendors, developed one vendor, and identified some agents who are supplying the material, collecting back from the centers and getting reprocessed back, so we can have extended process responsibility can be complied. Then I have mentioned in this also, I think nowadays everybody talks about the impact of the US tariff, which is ongoing. I can say that since April, this some confusion is ongoing. What is the tariff available, applicable to Indian products which is exported in the US? I am glad to tell you that your company is having manufacturing operations in US, and the products which is manufactured in US, it is for the local countries only, not export to the other countries. So it's because of the voluminous nature of the product is a voluminous product. So we are not much, I can say, the major effect regarding of the tariff of the US operation. Very small items, inputs which is exported from the other countries, which is used in manufacturing, in terms of the value, it is hardly 3 to 4% of their inputs which they are importing from the other countries. Now, I would like to open the floor to answer the specific questions, if any, which I have not covered in my speech.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Please note, ladies and gentlemen, this call has been scheduled for 60 minutes. Participants are requested to restrict their question to one per participant and come back for the follow-up. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Shashi Ranjan from Anandhan Capital. Please go ahead.
Hello. Good afternoon. Thank you for the opportunity. Congratulations to the entire team for the first quarter. Very good result. That is usually not that good, but this time it is quite good. So just one question, after which I'll come back in queue, that it is about Time Ecotech Private Limited. I understand that TEPL is a low margin business over the ones we have. So why do the capex is being done there? It is because of only extended producer responsibility, or and what is the revenue coming out of TEPL and this revenue from the power build in revenue visibility on that? Thank you.
Okay. Yeah. Anything else, or is it?
This is the one question. As I've been told to ask only one question, I'll come back in queue if you allow me.
Yeah. I think your question is right. One thing I'm telling you, if any reprocessed material, it's a one thing, it's a statutory compliance, we have to fulfill that. Second thing, the material which is available, recycled material, because when the drums which as a company is selling, I have to make the arrangement to buy back through the agents, which I'm going to do that, and that material is going to be used in the process back. So there is no any cost increase will be there, because as I am responsible, my customers are also responsible. So whatever cost will be there, that will pass on to the customers only. I'm just giving you one of the example. In India, we have to do it our own plant because we have a various product. We want quality assurance. Therefore, company is doing our own plant. And it's a requirement, and it is not going to affect the profitability of the company. Cost of the product, cost of the item, recycled material, including cost of the capital investment, everything will be counted when we worked out the cost of that raw material. And it is not going to be cheaper also. It will be the price difference between the cost of the procurement of the drums back plus the reprocessed material equivalent to the virgin raw material, which otherwise we are buying from the local manufacturer. So company, when considering this price, there is no effect on the margin will be there. And as far as financing part is concerned, company has adequate internal accruals available, and capex plan for the normal capex automation region is already there. And this is in the period of 2 to 3 years. The 3 regions will be covered. This year only the one region, western region, which has a very, very high requirement is there, and the availabilities of the recycled drums from the markets are available. So first plant will be the western region. Next year we will see the northern region, and then after the southern region. So it's a 3-year plan, compliance, for the statutory compliance, as well as margin will not be affected while working out the cost of the product.
So sorry to interrupt. My question was on the revenue visibility for the TEPL and power build. I understand that this is a 60,000 metric ton recycling plant TEPL I'm talking about. So just help me with
I think you have mixed up. I tell you, power build is a different. Power build is the energy storage devices. There is no any compliance any point of view. Power build is an energy storage devices, which I mentioned to you. 2 batteries is under process of approval, that is e-rickshaw batteries. Another battery is power sector batteries. As far as this energy storage devices division is concerned, our revenue is in the range of 125 crores, and in which we are counting e-rickshaw batteries around 35 to 50 crores we have taken into consideration. Now, the Time Ecotech Private Limited, which you are talking, right? You are talking the recycled material side.
Yes, sir. Yes, sir.
Yeah. So that is entirely different from the power build. Now, this is, as I mentioned to you, it's a statutory requirement and no cost increase to the company. Company will be able to maintain the EBITDA margin for overall the product, packaging product in that. You have seen that company packaging product, which constitute almost around 75% of the total revenue, which includes 37% from overseas revenue. And I'm glad to tell you, overseas unit, already we are getting some quality of the recycled materials available, and we are using our overseas plant. So we have no any means new technology or something. We are already experienced. But in India, that recycled quality material is not available. Therefore, we are putting our own plant to give the 100% guarantee, 100% product success for the finished products. Right?
Back in the queue. Thank you. Yes, sir. Thank you, sir. I'll get back in the queue.
Yeah.
Thank you. The next question is from the line of Jatin Damania from Swan Investment.
Good evening, sir, and thank you for the opportunity. Am I audible?
Yes, sir.
Yeah.
There is lot of background noise from your side. We would request you to ask question and
Yeah,
please
lot of
answer.
noise is coming, I think.
Now it's audible?
Yeah.
Yeah. So, sir, just wanted to understand now, given the growth that we have seen in 1Q coming from casket business with 18% volume growth. So how do we see a growth? Because now Type 3, we have already got an approval. Type 4, we are about to commission. And now with an MOU signing with a drone, how do we see a growth assumption for FY 26-27 for the casket business and the revenue as a whole? And second part to the question on the cylinder front, we were also in touch with IOC for a couple of orders which were supposed to come in Q4, which was got delayed in Q1. So you can give an update on that before I come back in our queue for other questions.
Jitin bhai, I think you are talking composite cylinder. You recollect my transcription, which I have said last time. As far as growth part is concerned, for 25-26, we are estimating 10 to 12% growth for the packaging product, around 28 to 30% growth for the composite product, which include LPG, CNG, hydrogen, other composite products all put together. So we are on that line only working out. As far as, because you know that in composite product, we have already developed fire extinguisher, which is also under process of BIS approval by one of the customer. Another, some kind of automotive sector composite product we have developed, that also we are regularly supplying, like air receiver tank, fuel tanks, etc. Then hydrogen cylinder, you are talking drone application. This is the R&D MOU have been done. This is the future of the business. Type 3 and Type 4, nothing to do. Type 3, because Type 4, I don't have a capacity currently. The new capacity, which you are aware that it is to be come out in the second half of this year, and we are in the process of completing our all other formalities, including the building completion in this first half of the year. The work is on, but there is some delay because of the rainy season is continue and delay in getting the completion of the construction of the building. So we are linking our import consignment directly, considering as the building complete, we get the power connection, we get it, I think, transfer from overseas supplier. So it is going to take in the second half of this thing. Now, another thing, as far as LPG is concerned, regular business with the existing customer, IOC is already there, and you have seen BPCL, HPCL, also discussion is on, and they have also started to utilizing the LPG cylinders. So composite product whole of the year, I think better clarity will come in the Q3 of this year, but we are sure to achieve the growth of in the range of 28 to 30%, especially in the composite products.
Sir, and a follow-up on this, on your value-added product, which is around 25 to 27%, with the commissioning of Type 3, what sorts of value-added mix you can see by end of this year and probably in FY 27?
I tell you, in 3 years, as I mentioned to you, I can't say the further because everything, but as far as we are not affected by the tariff or this thing, this is for the local consumption of the industry. So at least 2-3 years visibility as composite product after expansion also, we are quite confident about to achieve the growth of 30% as far as composite product is concerned. LPG, CNG, hydrogen, all automotive composite product, everything.
Sure, sir. I have a couple of more questions, but I'll come back in a queue. Thank you.
Yeah. Okay, Jatin.
Thank you.
Thank you. As there is a lot of background noise from the participants' line, we request participants to mute their line. while the management is answering their questions. Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, am I audible, sir?
Yes, you are
Yeah,
on.
Deepak.
Yeah. So, just a clarification first up. I mean, next 3-4 months, we were talking about some plant being commissioned. So which plant we're talking about here?
In fact, because certain new plants which are coming up in India, especially, but when Jatin has asked me about the expansion plan of the composite cylinder, CNG especially, in consultation, because currently we are manufacturing our CNG and hydrogen cylinder in the two places, some part in Daman, some part in Silvassa. But we are linking because my existing capacity is equivalent to 30,000 cylinders we can produce, which is going to be increased by another 36,000 cylinders. And you know that one cascade needs the 60 cylinders. So in terms of the cascade, we can say 480 cascade can be manufactured in a year as per the current capacity. For last year, company took the expansion by increasing the capacity from 480 to 1,080, 600 new expansion means one cascade 60 cylinders, so totally 36,000 cylinders in a month. So that expansion plan is coming nearby Vapi in the Gujarat only. So I am talking about that plant only. That is going to be started in the second half of this year.
Okay, so the capacity will increase from 30,000.
Yes, of course. Capacity which is currently hardly 480 cascade, which will generate the value of around 350 crores only. But after the expansion, definitely, which is coming for 300 cascade, the total business can be generated around 700 crores business can be generated from CNG and hydrogen together.
Okay, and this 30,000 cylinder we're talking about per month, right?
30,000 cylinder yearly. I am talking 1,080 cascades yearly.
Okay, fair enough. I got it. And just a question on the drone part. So what is the potential we can see in that particular?
We have not yet counted, but I am telling you, as I heard from the drone industry, there is many new companies are coming in India. We are not going to manufacture drone, I can tell you. We are going to develop our hydrogen cylinder for drone applications, because drone market, as per the current what I heard, it should be 75 billion by 2032. That is the estimation is given available in the public resources. So we thought the specific we can get a good realization, good value, and green energy, and it is really very we can have a make in India. And we can support to the drone industry. And all the batteries are the Chinese batteries currently, today. So at least we will replace it from the hydrogen cylinders, which have a light weight, then they can fly the more time, they can fly on the higher height. There are the multiple advantages. So we thought, let us first do R&D, let's tie up with some of the drone manufacturers. So we have tie up with the existing experienced person who is specialized. He has already experience of supplying 50 to 60 drones in India. So we thought it's better to have a tie-up with him. So our cylinders will be used there, and then we will take the experiment of supplying our batteries, our cylinders for the drone manufacturer.
Okay, I got it. That's very helpful, sir.
Thank you.
Thank you.
Yeah.
Thank you. The next question is from the line of Ankur Savaria, an individual investor. Please go ahead.
Good evening, sir. Congratulations on a good set of numbers again, sir.
Thank you, Ankur. Thank you.
My question is regarding, as you see that from last 2-3 quarters, we have given very good results. But since that you have announced that you are willing to go for a QIP, the share price is not going up. So are you comfortable in going for the QIP at these valuations, sir, after the company is doing so well for last 1 year, 2 years?
I am telling you, in fact, you know that in the last transcription also some investor asked me what will be the right time for the QIP. I told them there is no any right time. QIP is only, as per the without QIP also, I said very clearly, in the next 18 months time, company plan to have a debt free, because company have adequate accruals, adequate earnings, and company has a capability. Debt equity ratio is also very low, and company can borrow more, which is priced in the range of around 9% per annum. But again, as you know very well, I have discussed last time also, but again, there is a multiple object of the QIP, and therefore you know that already 8 months passed, I can say, after the QIP not did, because of the timing, you know very well, last 6 to 8 months, it's a very, very global uncertainty was there. So, means market growth was not visible, what kind of the business. So we thought we should have a certain right, because certain new products which company has developed in the recent year, and which have a very, very high potential. Especially we have told about the composite products, which include CNG, hydrogen and LPG. Very large potential. Market is very big in terms of the LPG cylinder. The 50 crore cylinders are in population. 32.68 crores active connections are there. And every year government need, which is currently totally sourced for the metal cylinder, except the small quantity in the last 3 years we have supplied to the government companies, where every year the requirement of the cylinder, LPG cylinder itself is a 3 crore cylinder, as against we and Supreme together have a capacity of hardly 1.7 or 8 million cylinder, which is hardly 7 to 8% of the requirement of the government. But at the same time, we were working hard for development and doing the development as per the under consultations with the government agencies. We should have a 14.2 kg cylinder for which development is ongoing. So it can be at par with the metal cylinder which is currently in the use. So very large potential we are expecting. So we keeping ourselves ready for the fast moving to capture the market and timely supply of the composite as well as LPG and CNG cylinder. Now composite product also, if you see the government policy, the total market size is more than 28,000 crores. We are projecting business of 2,500 crores in a period of 5 years. But considering the timeline of the equipment supply, because most of the equipments are imported and very, very highly imported from the overseas market, and it is a time-taking process of 12 to 18 months delivery equipment's time. So, and further companies as developing the hydrogen cylinder already approval in hand. So many other new plants are coming, biogas plant, and the hydrogen cylinders requirement is increasing in the drone. Other applications are in development. So we thought we should keep ourselves ready for the QIP, because at the same time, company management is also directing to maintain the debt at this level. And if we are going for the QIP, then why we should not become the debt-free as early as possible and do the expansion, need-based expansion, which to capture the market, available market in India. So that for reason, last year we got the approval. So we will see the right timing, right investment, procurement, right investment, because companies also exploring companies for organic as well as non-organic growth also there. Because one thing is very clear, as per the direction received and as per the management need, and to grow in the double-digit growth, then that is possible by organic and non-organic growth, and to capture the market which is developed by the company, for which company has made an investment time to time, where the market is very big. So we know very well packaging business which we are there for more than 35 years, but we can grow, that is in the pace of, I can say, 10 to 12%. But when company need to grow over 15%, it is possible only from the other where the market are there, especially composite products. So therefore we keeping ourselves ready for that. Nothing to do that we have to do today or tomorrow. We are keeping ourselves ready to capture the growth in the period ahead when the internationally. Also, I'm glad to tell you my capacity utilization internationally and India all put together is around 80%. Even international is 85%. But internationally we do only the packaging business. And my international team, certain expansion is in hand in the Saudi, in US, where to capture the local demand growth. That all covers under my capex plan of the normal capex, which normally 175 to 200 crores. But when the major demands come, so we thought we should keep ourselves ready to capture the growth.
So the point is well taken, and we have also seen that time and again, the promoters have also bought at these rates. So why are you not considering something like, say, right issues? Why do you want to go for a QIP? Even the shareholders, present shareholders will benefit from something like rather than QIP.
One thing I'm telling you, to give the benefit of the investor and to existing promoters also, we have already announced the bonus, because in the last 35 years, we have not given any award by way of a bonus. We thought promoters will also benefit, company will also benefit, and the widely investor can get the opportunities. Therefore, companies announced the bonus 1:1 in the history of these 35 years. Now, you are asking the right issue. You know very well, the promoter have no any other business opportunity. Promoter don't have a fund to put again in the right issue money, because promoter own 51.7%. All the promoters are having whole-time directors of the company, and they have a business of Time Technoplast only. So to avoid that, when the direct institutions, small investors are showing their interest because they are not getting their required value of the investment which they like to have in the company, and they would like to have a participate in the growth of the company, considering India and overseas operations. Therefore, we thought, okay, we have been suggested by the merchant banker, it's the right, instead of going the right issue, you should go for the QIP or the preferential issue for that.
Well, you will see that right from 2020, the number of shareholders has increased from 30,000 to 1,000, approximately 1,40,000. So the retail shareholders are showing a lot of interest, and their share in the shareholding has already increased so much that the pressure of the rates, share price is always there when the QIP is announced. That was only.
I tell you, I am not looking, company management not looking that QIP should be the higher price or something. It will be the reasonable price following the SEBI norms at all. If you recollect, the 3 years back, what were the prices? We don't control on the prices. It is again market circumstances, demand supply gap, international, I can say the circumstances, global scenario, everything considering the price. We don't see the prices every day, and we are not like, our work is very clear. We should deliver what we are promising to the investor. We should deliver, and we should go ahead for the direction of where we would like to have today.
Thanks a lot, sir, for answering my question. All the best, sir.
Yeah, thank you.
Thank you. The next question is from the line of Saloni Jain from Nirmal Bang Securities. Please go ahead.
Hi, sir. Am I audible?
Yes, Saloni. Yes.
Yes, sir. 2 questions. First, on the composite tender pace of tendering. So earlier we had seen a slower pace in tendering from IGL and BPCL, but recently Supreme also signed one LPG of 2 lakh 10 kg LPG cylinders, which is small, but what is your take on the pace of ordering going forward now, or is it the same?
I tell you, as existing users are actually there, and as I mentioned in my last call also, we are continuing export to the various 48 countries. We have a good order book for supply. So as far as this order is concerned, BPCL order was there, no? Which is BPCL order.
Yes.
Which is because some of the locations which is required by the BPCL, we are not nearby, and that is very near to the Supreme location. So in fact, our prices were little higher than them, considering the delivered prices. So we have left that order, and we are continuing to capture the other geographical where we are getting the good realization. It is very on the commercial sense point of view, we have not participated in that, and we have provided our higher prices compared to them.
Right. And so, with respect to our composite cylinder facility, what would be the utilization, and how much utilization are we expecting to ramp up after expansion?
I tell you, as far as I recollect my discussion last time I had, we have a current capacity of 1.4 million cylinder. Depending on the different sizes, we can produce up to 1.2 million cylinders, because various sizes, depending on the requirement of each country, we do manufacture. 2 kg, 5 kg, 10 kg, 20 kg, the different countries are there. So in terms of the revenue, I can say we can generate the revenue maximum of 240 to 250 crores from this LPG business based on my current capacity. So utilization, you are asking me, it is in the range of 85%. It is there considering the working days working days and efficiency of the equipments depending on the sizes of the cylinder. But again, expansion, yes, we will do the expansion at the right time after getting the finalization of 14.2 kg cylinders, which will be similar to the current metal cylinder, and when all the gas distribution companies like IOCL, BPCL, HPCL on the same page and same line for the same size, then we will put up the plan for expansion. And we are very clear, considering the experience in this business, the normal expansion time will take 4 to 6 months time in the capacity expansion. In the gradual way, we can do that.
Right, sir. And so my second question is on the new MOU that we had signed for hydrogen cylinders. Can you talk a little bit about this customer of ours, Drone Staff? What is the size of the company? How many drone capacity they have? And do they have the tech to integrate hydrogen cylinders with the drones, or that is still developing?
No. It is, I tell you, we have signed the MOU for hydrogen cylinder will be developed by us. Not there. There is no any know-how is required from the drone stock company. They are manufacturers of the drone. They have their own team. They are presently manufacturing the drone. They have a more than 3 years experience. More than 50 drones they have supplied in India to the government authorities, government companies in the various states now. And currently they are using the batteries. So we have very clear understanding. We will do the development of the hydrogen cylinders type 3 or type 4, and that will be used for the drone applications. And after successful trial, after getting the finance result, we will offer this hydrogen cylinder to various drone manufacturers. It is not a restriction that we will do the only for the this will be the one of the supplier. Not that. We can supply to any drone manufacturers. We are open for that. But that is only for the exclusively signed as far as development of the hydrogen cylinder for drone applications. Because all other infrastructure is available with them. As far as cylinder manufacturers is come, cylinder manufacturing capacity is come, that technology we have already, and we have already in hand approval for hydrogen cylinder of type 3 and type 4. That's we have.
And so if you allow me just one more question, if you could give us just a ballpark timeline of when do we expect to monetize from this technology of hydrogen cylinders that we have?
I can say next financial year you will be able to hear something, because the 6 month I am keeping ourselves. My expansion is coming from where we are. We will do manufacturing some hydrogen cylinder, but commercialization point of view, this 6 months time, in fact I tell you in the last time also, again I am mentioning you and last time mentioned, that we are going to have our own one drone. I tell you, the drone cost I understood from these people. The drone available in the market from 10 lakhs to 50 lakhs rupees for the various applications. So we are going to have our own one drone as a trial purpose, which will be available at our plant, so we can show to the potential customer these are the drone available, this how the battery, how the cylinder can be used, how it is flying like that. So we are doing that. I think next financial year will have some commercial value as far as how much cylinders we are supplying, how market is taking up.
So, thank you, sir. Those are my questions.
Thank you. The next question is from the line of Rohit from Samatva Investments. Please go ahead.
Good evening, sir. Thank you for the opportunity.
Yeah.
I just had one yes, sir. Sir, I had just one question on the IBC segment and in the domestic market. As per my understanding, last 1.5 years, there has been some pricing pressure overall in the market with some new competitor coming in and an existing competitor expanding its capacity. I just wanted to know how is the market in terms of pricing and in terms of the potential volume growth that you see in this segment in the domestic market for the next, 1 or 2 years maybe.
You are talking about the IBC, right?
Yes, yes, IBC.
It's called intermediate bulk containers, right?
Yes.
So,
As far as the IBC is concerned, let me just clarify to you, it is mostly a packaging which is basically used for export of the chemicals, etc., you know. So, the user base is varying from chemical industries, manufacturing various kinds of chemicals, etc. They export it. When you are competing in the industry, the packaging gets identified the brand that you manufacture. Today, GNX is a brand of IBC that we manufacture. It's a multinational brand. Today, I manufacture in all the 11 countries wherever we are present. As compared to that, there are just two other, global brands, such as Schutz and Mauser. So among these two, Schutz has just recently started a manufacturing unit somewhere in India. But other than that, the local manufacturers are all basically a standalone local brands. They are not really internationally recognizable. So whenever they have to be talking about an export of the chemicals and packing it in a certain IBCs, the buyer at the other end would also like to ensure that he uses the right quality-based packaging, and which he has a reliance on. So that is where they go for international names, and that is how GNX has been able to really get that recognition. We are able to get that differentiation in the market, both in terms of the pricing and also in terms of the preference. Additionally, we have multiple location units for IBC, even in India, because we are a geographically large country. So we have a couple of units in Daman. We have got one unit up north in the west in Dahej. We have one unit running up in south also. We also stock and sell in Bhuj and Calcutta. So we have a fairly wide network to ensure that we are able to capitalize on the market demand and stay very, very competitive. So that's the reason as to why we are able to ensure that the IBC will continue to have a positive growth as compared to the other industrial packaging products as well.
So just, has there been any pricing pressure overall in the industry because of Schutz coming into the market, or have you been able to retain prices?
No, I am very clear. We are quality standard company. We have to maintain our quality standard, and we are getting our pricing and remain able to maintain our required margin. Therefore, it is counting under the value-added product. We have already said it's come under the value-added product, where we have a required margin there. And as my colleague mentioned to you, the growth in the IBC as the export from India is increasing. So percentage terms, growth in the IBC, we are also projecting in the range of 18 to 20%, and we are maintaining that growth. And I am glad to tell you, one of my subsidiary company has put up the fully automatic plant in Western region, Dahej, and and another plant is also coming up in the Maharashtra also. So IBC business, definitely it will be there, and company is going to be focused for the export, make in India, and that is growth compared to other packaging products. Its growth of the 18 to 20% will continue. And in India and overseas put together, I tell you, in all the overseas also, we have a very good business, value of the business as far as the IBC business is concerned in US and Southeast Asia and Middle East, everywhere. And as my colleague told you that brand is the GNX have been created with the hard working of more than 20 years in this product.
Fair enough, sir. Thank you so much for the elaborate answers. Wishing you all the best. Thank you.
Thank you. The next question is from the line of Ganesh Kumar, an individual investor. Please go ahead.
Good afternoon, sir. Can you hear me well?
Yes, Ganesh, yes.
Thank you for the opportunity, sir. Just have a couple of questions. So we had reports about the 14.2 kg LPG cylinder that we are working with another partner and with Indian Oil and other PSUs. So any update on that? That is number one. And the growth percentage of CNG cascade, I think we just did a very big expansion, completed it. It's on screen. But the growth percentage, I'm not talking about the growth number, the growth percentage seems to have leveled off. I think we have an order book of 150 crores, just like last year, same time. My third question is about what is the total market value for the e-rickshaw batteries that we have planned?
Okay.
Those are
I'm coming one by one. I think first you asked me the 14.2 kg cylinder. Currently we manufacture 2 kg, 6 kg, 10 kg, and then 28 kg, like various sizes are there for the requirement of each country. 14.2 kg, the currently in India, most popular cylinder, which government providing in most of the home you will see 5 kg and 14.2 kg. Now 14.2 kg is the metal cylinder weight which is currently it is there, and 14.2 kg is the weight of the cylinder. Total put together is 29 kg. The current cylinder which we are supplying to government gas distribution company like IOCL, BPCL, HPCL, we and why I am using word we, because as the Time Techno and Supreme both are supplying the 10 kg cylinder, where the weight of the cylinder is around 6 kg and gas is the 10 kg. So that and 5 kg is also there. So two types of the cylinder we are supplying now. The 14.2 kg, we are under development, I mentioned in the last call also, so where the design should be the same, process is the same, so that all government, 3 companies can use the same cylinder and across the globe the uniformity is there. So that development is under the, means again I can say it is need 6 months time, which includes the design approvals, tool development, then finally materialize and do the expansion plan. Expansion plan, I mentioned just 10 minutes back to somebody, that expansion plan we will decide after receiving the large size of orders for the 14.2 kg cylinders. But till in the intervening period, we have been given the assurance by the gas distribution company, they will continue to the buying of the 10 kg cylinder which presently is supplying. So that is as far as 14.2 kg is concerned. Now I have not considered any capex plan for the 14.2 kg cylinder. Only we have considered in our product development cost. Only we have included in our normal automation and re-engineering expenses. Now you are asking me CNG. I mentioned that CNG expansion yet to do, capital expenditures amount including advances already remitted. Now the expansion will complete in the, I can say in the next 60 days time. So it is made available for the commercial business in the second half of this year. CNG market is big. Order booking, I tell you, we have mentioned also that currently we are supplying that CNG cylinder. Not only the cylinder, we are supplying completely cascade with the different sizes of cylinder. But CNG market, you know, automotive sector is a very big market is there. We have not yet explored that possibility. We have already approval in hand for the 60 liters CNG cylinders for the automotive application. That market also we will capture in the next fiscal year after completing the expansion. Now you are asking with the e-rickshaw business. As I mentioned to you in our projections, we have taken business of 35 to 50 crore in my total energy storage devices business of around 125 to 150 crores. Now, e-rickshaw batteries, company has developed, performance is very good. We submitted our sample to the government nominated agency, which is, we are expecting that approval because testing, there is a certain minimum time required for the testing in the government system. So we'll get that approval also in the next 30 to 45 days time, approval in hand. But again, I am thinking one thing clarify. Certain in the secondary market, we have already started seed marketing because they don't need the government certificate approval. They can use because it's a very, very good performance batteries. And as I think we are supplying to the secondary market the e-rickshaw batteries in certain states, we have started supply of these e-rickshaw batteries. But yes, market is very big. We have done this product development with a small investment of around 4 crore rupees, and we did develop these products. This is the, so yes, in the period ahead, if you would like to expand in e-rickshaw batteries, I'm going to tell you that this is the low maintenance batteries, and they use in the rickshaw four batteries they use, and approximately one battery cost is in the range of 8,500 to 9,000. So total rickshaw, one set of the batteries is 36,000 rupees, and that 4 batteries can run 120 kilometers in a day. So that is normally rickshaw runs in a day 120 kilometers. So that's the way of the as far as e-rickshaw is concerned. I hope I have answered your queries.
Yes, sir. Thank you. Thanks a lot. I'll join the queue.
Yeah. Thank you. Sir?
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to management for closing comments.
Yeah, thank you very much to having a patience and listening to the management commentary on the Q1 FY26 result. Thank you to the team of Motilal Oswal, who has introduced us and arranging this conference call for update of the FY. And one thing I'm telling you, we are committed to create the value of the investor by maintaining the double-digit growth and achieving the ROCE of around 20%. Thank you very much.
Thank you. On behalf of Motilal Oswal Financial Services Limited, concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Yeah. Thank you very much. Thank you.